Michael Burry. He's the guy from the movie The Big Short who predicted the last financial crisis in 2008, where the bubble popped and he made millions of dollars from this. Now the interesting thing is, 12 years later from the stock market crash, Burry thinks that we are in another stock market bubble. Burry says this is very much like the bubble in synthetic asset-backed CDOs before the great financial crisis, in that price setting in that market was not done by fundamental security level analysis, but by massive capital flows based on Nobel approved models of risk that proved to be untrue. Like most bubbles, the longer it goes on, the worse the crash will be. Now the question becomes, well, how is Michael Burry prepared for this potential upcoming market crash in 2020? And that's exactly what we're going to cover in this video. Michael Burry's portfolio in 2020. What are the stocks that Burry owns to stay prepared? At the moment, Burry only owns 7 stocks. Burry's largest position is a stock by the name of GameStop, a gaming and electronics company. He owns 3 million shares in the company, coming in at a total value position of 16.56 million. It makes up 27.8% of his stock portfolio. Now GameStop, as I said before, it's an American video game consumer electronics and gaming merchandise retailer. It's a gaming and electronics company, basically put. And they're a big one as well. They have 5,830 retail stores throughout the United States, Canada, Australia, New Zealand, and Europe. They have 4 main brands, which is first, obviously, GameStop, EB Games, you might have heard of that one, ThinkGeek, and Micromania. So you would think gaming and electronics, that's a growing industry. Surely GameStop is a stock doing well. Think again. GameStop stock has actually dropped 88%, once selling for a price of $46.8 to a price today of $5.50. This big collapse is the reason why Michael Burry chose to buy into GameStop, because he sees value at a cheap price. The main reason why GameStop crashed was because more and more people these days are buying things online instead of at physical stores like GameStop. This meant instead of making money in 2019, they actually lost money, $673 million. So what does Burry say about this? Burry says GameStop's balance sheet is actually in very good shape, and its future cash flow would justify a much higher share price. Burry has personally said that things look worse than it actually is, and is obviously very attracted to the current share price. He does not think it should have been as bad as it has been, and that's why he bought in. Stock number 2, Tailored Brands. So this men's apparel company is Burry's second largest position, making up 21.2% of his stock portfolio. He owns 2.875 million shares in the company with a total value of 12.65 million. Tailored Brands, it's a holding company for various men's apparel stores, including the likes of Men's Warehouse and JOSA.Bank brands. So they offer things like suits, business casual wear, dress shirts, also sportswear and sports coats, shoes, stuff like that. Today they have over 1,400 locations selling these types of items. However, just like GameStop, this stock has been absolutely pummeled over the past couple of years. It's actually down over 90% since its high in 2015 of $65 per share. And this is the time when Burry likes to come in and snap up shares when they are cheap. Generally speaking, he doesn't like those stocks at all-time highs. He likes those stocks that have crashed. And right now, Tailored Brands is selling for a price of $4.80. That gives it a dividend yield of 13.7%. It looks like a very interesting buy. Now, a lot of you will know this stock. A lot of you should know this stock. It's Alphabet. They're the company that owns Google. Alphabet's actually a pretty strong position in Michael Burry's portfolio. it makes up 16.4% of his total stock portfolio. He owns 8,000 shares in the Class C section of the stock, and it makes up a value of $9.75 million. Alphabet, they're a pretty easy company to get your head around. They make most of their money from advertising. Google ads. Just think about how many people are on Google and how many people are seeing the ads. It's a lot, I'll tell you that. But Alphabet, they also own YouTube, which also obviously gets a lot of users. Actually, 5 billion videos are watched on YouTube every day. That's a lot of ads, and that's a lot of money for Alphabet, who take 40% of the ad revenue. But then Alphabet also own a bunch of other major companies, which you can see on this graph. Coleco, Verily, DeepMind, Android, etc. The likes of these type of companies. But for all of those who are looking to get your hands on Alphabet/Google stock, it's a fair chunk of change, currently selling for a price of $1,343 per share. If I had to guess, I would say this is a more long-term play from Burry because of all of Alphabet's businesses that they are set to take advantage of in the future. Giving Burry nice exposure to the sporting side of business is the stock called Sportsman's Warehouse, ticker symbol SPWH. He owns $8.4 million worth of the stock, and as you can see, it makes up 14.1% of his stock portfolio here in the US. So the interesting thing about a lot of Burry's investments is he's focusing on small cap stocks because he believes passive investments like index funds have inflated the large cap stocks and therefore left opportunity in the smaller cap ones. And Sportsman's Warehouse is one of those small cap stocks with a market cap of only $356 million that Burry has seen opportunity in. Another stock that has been beaten lately is Burry's fifth largest position, Bed Bath & Beyond, and one of the nice things about the stock is that it pays a dividend yield of 4.37%. So all you dividend investors out there, you might want to look deeper into the stock. I mean, Bed Bath & Beyond, they sell a range of merchandise through their different brand names. Bed linens, bath items, kitchen textiles, tabletops, houseware, items relating to those sort of categories. And Burry owns a decent portion in the stock. It accounts for 13.4% of his portfolio. He owns 750,000 shares in it, and its total value is worth almost $8 million. When you account for its 4.9% dividend yield, that's not a bad amount of dividends that Burry's receiving each year. I wouldn't complain myself. Moving on to the next stock though. Burry's sixth position is one of the largest oil and gas companies in the world, and it's based in Canada. The company has reserves of 9.679 billion barrels of oil equivalent. CNR also has 2 operated pipeline systems, an electricity cogeneration facility, and a 50% partnership in the Northwest Redwater Partnership. That's what you need to know about the company. What you need to know about Burry's position is that it's 6.7% of his portfolio. He owns 150,000 shares, which is worth almost $4 million. If you take a look at their strategy when it comes to their assets, they like to diversify. They own a range of different types of oils and gases, and as you can see, it's across the world as well. North America, the North Sea, and offshore Africa. Let's move on to the last stock, and then I want to talk about how to stay prepared for the potential market crash in 2020, 2021, whenever the heck it might happen. Now, this stock, let's be honest, it only makes up 0.4% of the portfolio. We don't want to focus on it too much. It's a stock called Nuvectra. Burry only has $263,000 worth in this medical device company, and for him, that's a really small amount. So I don't want to give it too much attention. But the one thing that does deserve a lot of attention is Burry's prediction that we are in a bubble because of passive investing. Burry said, the dirty secret of passive index funds, whether open-end, closed-end, or ETF, is the distribution of daily dollar value traded among the securities within the indexes they mimic. Trillions of dollars in assets globally are indexed to certain stocks. The theatre keeps getting more crowded, but the exit door is the same as it always was. So what he is saying is all of this money is going towards those big market cap stocks because of passive investing. Instead of people analyzing each stock that they buy, they just put it in an index fund without knowing the value of each pick. And this is why Burry thinks that there's still opportunities available today in certain smaller cap companies that are less analyzed by investors. So that is why in today's market, you can analyze into those smaller cap stocks that Burry is investing in. Or you can go to other experts. My personal main go-to guy is someone called Sven Carlin. He invests in those type of stocks that are less analyzed by investors, and therefore they offer greater opportunity. Just like Buffett said, if he had less money, he would be looking at those smaller cap companies. Anyway, I'll leave a link to Sven's portfolio in the description. It's definitely worth it. But those are the 7 stocks owned by Michael Burry through his investing fund, Sion Asset Management. Now remember that these stocks are the ones that he legally has to disclose. The one thing that he doesn't have to disclose is his short positions, which I would love to know, but unfortunately it's not possible. Nevertheless, Burry clearly sees opportunity in smaller cap companies and companies that have been beaten down in terms of price. And that's where most of his stocks are today.